Why has Zerodha stopped growing?
We are not as rich as a country. Our per capita GDP numbers are flawed.
I think it's a very traders versus a retail investor mindset.
Exactly.
I actually don't agree with that specific point, and I think so. It's overtold in the industry, to be very honest. I feel the zero one network is one of the best marketing strategies in this kind of businesses.
Is like Zerodha losing market share? Does that even matter? Welcome to this week's edition of the Indian Startup Desktop. Let's go.
Hello, hello, hello.
Hello, everybody.
If you're watching us for the first time, please don't forget to subscribe to our channel below. All right, let's get started to the new economy. Airbnb has no homes, Uber has no cars, you have no bitches. This is the new economy. Okay,
Lovely.
no comment. Moving on to stalking. Your stalking is LinkedIn. I'm stalking his dad's company on Zobacop. We are not the same.
Hashtag find me a sugar daddy.
Moving on to college fetish. This is sick, dude. I mean, this is lame. What kind of fetish is this? Writing your college name with cringe lines. I've also seen ISB alumni writing similarly. You are chasing an IITBN, but that's okay. We are used to it.
This expression of Pete says a lot, okay?
I think it's lame as fuck, bro. Let's move.
To smart ideas. This is a really nice suggestion that this intern made. Hey, had a quick idea for the company. Sorry if this is already brought up, but have we tried increasing revenue?
Bro, imagine asking this to a founder the first day.
I love the new generation at workforce, dude. There are so many negative things being told. People are so bearish about it. But I
I think
see
they're great.
a
Same here.
fresh attitude
Yeah.
and like a new charm and like new energy and like
I
a
actually
new
love
culture in general.
the no fucks given attitude the most, bro. Like
Yeah,
that no corporate bullshit. I think it's great.
same.
Yeah, I mean, amazing.
Moving on to my new quant. This is in reference to that movie, The Big Short. But look at this. This is my quant. Notice how she's hot? Yeah, she moved American Eagle's market cap by 300 million in one day. We'll get to this
Wow.
topic much later, but funny.
That's crazy, huh?
Moving on to our story of the week. Why has Zerodha stopped growing? Before you guys jump in, let me just read Nitin Kamat's post. Here's the context. Our AUM share is growing. That is, people with more money trust us. But our DMAT share is shrinking. Fewer new accounts. The people with money are sticking with us, but many aren't opening account with us. Most likely, the newer and younger and people from tier 2 and 3 towns are probably investing elsewhere. The challenge is that once people pick a platform, they rarely switch. And we have constraints that our competitors don't. We won't advertise, we won't offer account opening incentives. Broking is cyclical by nature. So how do you grow when you can't play the traditional acquisition game? The obvious answer may be content, but we have significantly improved on it. Hard to measure the impact. Wow. Zerodha for the longest time were market leaders in the broking business, but off late they've been losing market share with a bunch of new apps coming in. Saksham, I know you've worked very deeply in this space, so why don't you take the first put?
Actually, I want to start with just diving a little bit deeper on these numbers that Nitin is essentially talking about, right? I think all of us know that Zerodha has been a market leader for almost a decade, right? And they were the ones who started this whole wave of actually investments in India to some extent. But if I just compare the numbers of the last two financial years, right, which is FY 23-24 versus an FY 24-25, they opened about 18% of the overall demat accounts, a couple of years ago, which dropped to just a 7% market share in the last year. What it also means in absolute numbers is that they went from onboarding 70 lakh new demat accounts and not users, because one individual can have multiple accounts, to only about 29 lakhs in the last year. Right now, obviously, there are multiple reasons to this. But why don't we actually start with the first thing that he has mentioned in his post, which is about content? Now, I know that Zerodha is doing a lot of new content on YouTube, and it's very good stuff. But what do you guys think? Is it relatability of the content or the complexity of the content which is also making a difference for them? Pawan,
On
why
this
don't you go
point, right?
first?
On this point, even Kunal Shah has replied. Most fintechs eventually become good at top of market or mass market. Being everything for everyone often makes us nothing for anyone. Pavan, let's start off with this, right? What do you think? Is Zerodha playing the content game well, but why aren't they able to divert traffic from their content games into their core business?
There are a couple of ways to look at it. Okay, in first, when we see about the stock market or investment management as a market, right, we shouldn't be considering it as a 130 crore people ka market. There are so many constraints to that market. First of all, people above 18 are allowed on it. Most of our population, I think so, 40 to 50% of our population is less than 30 years age. I think so half of that is like less than 18, if I'm not wrong. The last statistics were saying that, so that time reduces a lot. The people above 60 years of age are not so much into this market in our Indian context. So that 130 crore market being people being a TAM is a bullshit number. In that also there is a deviation. We are not as rich as a country. Our per capita GDP numbers are flawed. If you do all those math, that number comes to somewhere like 15 to 20 crore people in India are legitimately having money to actually invest and bring up a sizable term in investment and wealth as a market. Now what are people doing is, India is a hopium country. We have discussed this in past as well. The last trend wave that came, which taught a million people in India about future and option, have also somehow told a lot of other people from lower strata that there is a lottery scheme available in market where you put 100 rupees, there's a possibility of making 1,000 rupees, but they have not told them that there is a possibility that you'll use 500 rupees for that 100 also. Okay, so there has been an amount of rush that is going on. People don't know how to use stop losses. They just think that I can invest like 500 rupees in future and option and it's legal. It's not like gaming. I don't end up paying like 40% of my profit, although in long term capital game, short term capital, you end up paying that much only. But this culture, which has gone down from tier 1 society to tier 3 society, has started a number of people getting on board. And then there is a legit trend also. People have now gotten to know that LIC investments are not enabling so much returns to them. Other forms of investments are not as good as what mutual funds or equities are giving. So there is a new decent trend also that is coming on board, which is getting more people to it.
Hmm.
The question now comes is, which part of the market share do you want? For Zerodha, because they had an early mover advantage, I'm not saying a tech advantage or any other, they had an early mover advantage because they had this tech system before any other brokers or legacy players also.
Yeah.
They got to these power users, these top 1% or top 10%, or what Cred mentions in like affluent or rich people, right? They got all these people on board with them. And as Nitin had mentioned in this, people barely change it. I might open another broker account, but I would not actually worry about changing the funds or my main account to the alternate account.
But to this point, Pawan, right? I think it's a very traders versus a retail investor mindset.
Exactly.
The point that you are saying it
Correct?
right, it makes a lot of sense for a lot of traders because they typically stick with one app. But a
Correct.
lot of retail investors, especially the new age retail investors, a lot of the Gen Z population who's now obviously becoming 18 plus and starting this, they actually want to go behind one, what my friends are doing, what is cool, what is more relatable. To which I feel like, and just coming back to the content point, right? I think one of the things that potentially a Zerodha could do is how do they make content in both Hindi and English, right? How do they also make maybe short form content? Today, a lot of things that they do, I think they're making great content, but one, it's slightly complicated for a normal audience of let's say 18 to 24, 25 to understand because they might not know a lot of those technical know-hows or the jargons that are used typically in the stock market ecosystem. And second, because they ideally want to now reach this tier 2 tier 3, I don't know if an English content serves that audience very well.
But I think so. They have done a good job there also. The Zero One network has a host of
Yeah.
Hindi content maker, English content makers. I think so. They are focusing on regional content makers also now, going specific language wise.
Yeah.
I don't think so. Like, I feel the Zero One network is one of the best marketing strategies in this kind of businesses that has been done ever in India almost, because they are not allowed to publicize their product directly in the market. It's
Hmm.
against the rules. So that's why they found a route where they place their logo but never talk about the product, have a subtle brand marketing, but still not push it over the top. Those kind of things are
But do you
amazing.
not think it creates confusion? Pete, tell me this, right? What do you think a Grow or an Upstocks are doing better today as compared to a Zerodha? Do you think Zerodha having multiple apps, right? Like a coin, like a kite, like a varsity, like a console, Do you think it's actually end up confusing users and are pushing them away to another apps wherein all of their portfolio essentially gets consolidated into one single app?
Yeah, look, I'm not going to get into the super app versus standalone, app context, but the point that I want to make here is that, dude, look, if Zerodha wants to acquire new generation of users, they most definitely can. In fact, they only recently got away with this account opening charge that they've had historically over the last couple of years, maybe like close to a decade also. But the point that you guys are mentioning, which is FNO traders versus retail investors, the biggest money is in FNO trading. That's where all of these brokers essentially earn their bread and butter. So the larger question is like Zerodha losing market share? Does that even matter in the short run? In the short run, for sure, it doesn't matter, in my opinion. In the long run, because India has a younger demographic, and these people are eventually going to be the ones with large amounts of money to trade, to invest, so on and so forth. They might be losing the long term game, right? And that is where I think apps like maybe a Dun, a Grow, a Angel One, all of these apps are actually doing quite well, where they're catering to the next set of millionaires or next set of investors.
But that's also what it's about, right? It's eventually about revenue versus distribution. I think what Nitin was talking about from a growth perspective is more that they're not able to get a lot of the retail investors today on board, because I don't think revenue and distribution, at least in this market, are linked directly, right? Because everyone knows that money is to be made with traders. Like retail investors don't make money for stockbrokers.
I actually don't agree with that specific point, and I think so. It's overtold in the industry, to be very honest. I feel at some point this industry will consolidate, and HDFC Bank had to get into HDFC Securities. ICICI Bank had to get into ICICI Securities. Majority of the legacy stockbrokers are the banks in itself, and this industry will see a shift at some point where security people or these brokerages will get into banks, and we have already seen that happening with Grow, where they have gotten into lending massively.
Yeah,
They are
even
lending
Angel One,
loans.
even an Upstocks is getting
Everyone
into
is getting
it.
into
Yeah.
lending, right? And at some point RBI also will feel that why do we need to build a duopoly or a triopoly with just an Axis Bank, HDFC Bank, ICICI Bank, and five other our favorite of banks? Let's get more people into the game, because this lending industry is also growing, and we can't control it with like five people. That's when they might release newer licenses. And who would be the best contenders? I think so. Zerodha is one of the best contenders for RBI banking license because of trust. Fully owned subsidiary. There is no offshore funding which has been gone into making of Zerodha, and they have been the good boys. Their perception in the market is like, we are trustworthy, we are good, we will do what is right for the customer. These are the things that RBI likes in general. So if there is a game that can be played to become a bank, don't you think that why do you need to limit your acquisition flow just for trading? Future and option is one
But
still
I
part,
feel
which is a main revenue center now. If the moment you become banks, you can do so many things with those people. You can open savings bank account, current account, business account, payouts, pay-ins, UPI. The entire funnel opens up to be a large entity there, right?
But do you not think credit and investments are still two separate markets to some extent? Like, not everybody who wants a credit today essentially wants to start investing, right? Our economy, especially in tier two, tier three, maybe what you were saying makes a lot of sense for tier one economy, but I don't think if this holds true for tier two, tier three, right? I don't know if the both can be correlated to that extent. Pete, what do you
Have
think?
to, I don't know, but I feel it has to.
Yeah, look, I think
And
the point is, look, Zerodha's app feels very complex, feels very serious, right? And until and unless you are a avid trader or a very deep investor, chances are that you won't be attracted to the app and to keep using it more and more. I like Grow's UI a lot more, even though over the
Yeah,
last couple of months, maybe the last year or so, it's become a little bit of a clusterfuck. I still like Grow is my go-to investment app. What about you
yeah.
guys? Which is your go-to
Same.
investment app?
It used to be Coin and Kite, but today all my primary investments are on one Grow. I also use IND Money because they do consolidation fairly well.
I
So these
agree.
two apps.
IND is very
I'm
underrated. Haven't you?
I'm on Kite and Dhan, Kite for trading, and most of my AUM based everything is on Zerodha only. Mutual fund, stocks, equities, everything. I don't know. It's just that trust metric. Maybe I do align with that. If you just take a Venn diagram out of cred users in penetration in India and Kite user penetration in
Of
India, I think so
course,
it's
Pawan.
definitely a subset. They are the same set of people. They are the same
Pawan,
set of users, I'm telling you.
Pawan's favorite topics: Venn diagrams and cred users.
Sure.
Yeah, it's the same set.
Saksham, how do you want to conclude this?
I would say there are two, three angles to this. One is, should Zerodha start focusing on consolidating maybe into one app, or if they still want to have separate apps, have one app for traders, one app for retail investors. And obviously, for retail investors, they might have to relook at their strategy from a marketing, content, newsletter, all of this standpoint, and just make the app interesting. I think that's the easiest solve that potentially could happen.
Okay, look, every app has a do-it-yourself kind of a model, right? Where you basically open an account and basically figure out which stocks to invest, which funds to buy, blah blah blah. I actually think the next wave of investment apps, or the current, the new thing of investment app is how can you help people make money consistently?
Yeah.
Where maybe it's through AI, maybe it's like combination of AI plus human, but the outcome that you're focusing on is not to give like a 0 rupee account opening fee or a smooth UI for 90% conversion or whatever, but it's simply to help users make fucking money.
Yeah, which is exactly what I think Vint Wealth is doing. So, in this ongoing India versus England test series, Vint Wealth is advertising just saying that we will give you 9 to 12% assured returns.
Yeah,
And
even
that's their
Deserve,
and
even
that's their
Deserve is
play.
doing that extremely well.
That's the thing, right? It's a different kind of product. You can't sell equities and futures and trading and options like that. It's a
No, but we're
different
talking
product
about
altogether.
retail investors. We're not talking about traders, Pawan. When we talk about
No, no,
distribution,
yeah, yeah.
it's to
But
retail
Pavan, in my
customers.
opinion, bro, like even though these are multiple different products, the job to be done or the outcome that all of these apps or all of these underlying investment products promise is make more money. Whether you invest in stocks, whether you invest in mutual funds, whatever it is, the end outcome is to help people make more money.
There is a lever. Make more money or make much more money or make insane amount of money. Make more money is all this 9% assured, FD, bonds, stable money, all kind of things. Make much more money is equities. There is a potential upside if you invest in Nifty 50, you'll make like 12%, 14% more than that, or like a mutual fund. Much more is the dangerous part, or the insanely more is the dangerous part, which is like futures, options, trading, and all those things. That's the problem. Majority of India wants this insane amount of money times. Everyone knows my bank also will give me 8.75, or this ad will give me 9%, 0.25% arbitrage. But I want to become rich overnight. I want to play that FNO game and shoot it out of
Which
the.
is exactly what I'm trying to say, right? The promise is to basically absorb this complexity of figuring out which stock to buy, when to
Yeah.
sell, how to sell, blah, 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 and just help them make more money. And that obviously that outcome needs to be obviously built over a period of time through trust and a bunch of other factors that come into the play, right?
Then potentially I was saying that the businesses need to maintain themselves in certain way where they ignore a part of market altogether. Why would they want to do that?
But I'm saying financial advisory is the be all end all for any investment platform. That is
Got
why
it.
an HDFC is not focusing on new users or getting retail or getting FNO stuff like that. They make majority of their money, and I could be wrong over this because I just heard this through some conversations. They make majority of their money in financial consulting, right, and wealth advisory.
Yeah, I'm not sure. But one quick notion. Would you guys prefer a human in financial consultation or an AI? Individual opinion, and I think the users also can comment.
Yeah, sweet spot has to be both, wherein you do a lot of calculation using AI, ML, etc. But there is still some validation happening at like a human level to also give that feel to the customer that it's that they are really cared for. I feel.
Yeah, I like for answering basic, high level questions. I don't want to wait for a human to be free to do that. If there is an AI bot that can help me answer that, that's great. But whenever I want to, let's say, roll up my sleeves and go deep and understand certain, markets, sectors, stocks, companies, I would want some sort of human intervention as well. So yeah, I think my ideal future would be a mix of both. Pavan, you?
Uh, yeah, I agree with you in terms of ideal scenario is both, but I have been using GPT and AI tools a lot to do this, and I feel it plays out really well. The only problem is the perception. Why should I trust an LLM which doesn't give me that much amount of confidence? But whereas a human, although the advice that is coming from that human might be completely wrong, it might be completely biased, but that amount of level of confidence that brings it up is like insanely high.
Okay, folks, I think let's move on. Saksham, any closing thoughts?
No, I think we all love Zerodha. I'm sure they'll figure out what the next wave of distribution for them has to come from, where it has to come from, and I think content is might just be the answer for it. They just have to figure who to target, how to target, and what form and kind of content they should essentially start putting out.
Exactly. So, Avan Kumar Kamath, please tell your uncle Nitin Kamath that everything is going to be fine and they're going to win in the long term.
Okay, sir.
Let's move on to our Silicon Valley news. Is Apple sleeping on the AI wave? A lot of the mang or fang companies are, investing considerable amount of, time, resource, and bandwidth, on AI. But Apple, for some reason, seems to be moving very slow. But they have plans to significantly grow a lot of their AI investments. Apparently, they've made about 5 to 6 odd acquisitions in the last couple of years, in vertical AI platforms. But Pavan, what do you think, or why do you think Apple is moving relatively slower over here? We've seen Microsoft obviously invest, in ChatGPT. Meta is doing a whole bunch of things. Google with Gemini is doing a whole bunch of things. There is obviously, Anthropic and OpenAI that's also kind of breaking in, and there's a lot of commentary that says that maybe an OpenAI will be part of the FANG mafia very soon. But why do you think Apple is moving really slow? Is it because of legacy, or is it because there's a conscious decision that they want to wait and see this market playing out?
I feel it's a legacy problem now. I feel most of the team have run out of fresh idea on how keeping Apple as young as possible and making it a brand connecting with the youth or like larger part of population in general. They are playing it very safe is what I feel.
Hey bro,
If
they
you
want
see,
tempered glass UI, okay?
that's the exact thing I was about to say. Can you expect Apple releasing that kind of the bar for Apple to release itself is so damn high. Apple would do like one phone launch a year, but that would shake the market. People used to queue in front of shops. People used to go nuts over it. We used to put all their life savings to buy that one electronic device, which is a complete liability. Where have we come from there?
Yeah, actually, to Pawan's point, right? I read this one statement somewhere which really has stuck with me, which said that Apple's cautious AI approach risks making it the next Nokia and not the next innovator. And the point actually largely was that, because of so much of restriction and just this legacy thing of not rushing into things, not prioritizing a lot of things around AI, right?
There's one saying, right? Perfect is the enemy of good. And I feel just their way to make things perfectly work on AI are a problem in some way. Where an OpenAI is risking everything, is okay with having a high bar, but okay with shipping that product in the market, testing it, getting feedback, fixing things. If that doesn't work, release a new model. Same with like all the things that is going on with AI, right? So
Yeah,
many things that Facebook is doing, like on the UI, on their Instagram layer and all. They
yeah.
are not feared of failing. I feel Apple's strategy of releasing perfect stuff worked really well. We all loved it to be like the perfect thing that we get in on our hands and like swipe, it works every time. But that strategy probably for this AI age might not work so well, is what I feel.
Yeah, look, all this being said, we are still using our iPhones to record, our MacBooks to browse, and our AirPods to listen. So, and AI is basically commoditizing software. Hardware is still going to exist. Distribution for hardware still remains the biggest lever of growth of these tech companies per se. But yeah, it's interesting to see how this will be played out in the next couple of years.
Yeah, for sure.
And believe me, they are one of those companies who are in the sweetest spot for the vertical AI integrations where they have control of hardware,
Yeah.
I
the
agree.
software, the devices,
And
the
I think because of
cloud.
the closed loop ecosystem, right, there is just so much potential that they can do. And I think the distribution has happened so much. And everybody has access to this closed loop ecosystem. You can just make things significantly greater because you don't have to worry about this integrating with another device whatsoever. Like that's something that Apple has never cared about. And they should just double down and go deeper into this, I feel.
But guys,
Yep.
the new set of hardware equipments people are saying are going to be eyewears. So I've just recently bought the Meta Ray-Bans and I absolutely love it, dude. Is it worth the cost? No. Will I reconsider my purchase decision? Probably yes, but I love using it today. On
Nice.
a completely unrelated note, if people want to buy a second-hand Meta Ray-Bans, please hit me up.
Bro, I think we should end the episode here.
But that's it from this week's edition of the Indian Startup Desktop. If you're watching us for the first time, please follow us below and do let us know your thoughts in the comment section as well. We read every comment seriously, considering we only get about 5 to 10 comments per week.
Bye, guys. Take
See you
care. See
guys.
you next
Bye.
time.
Welcome to this week's edition of the Indian Startup Desktop. Let's go. Oh, fuck. It's fine.